Good morning and welcome to another edition of Merrill's Monday Morning Market Madness. Today we are going to be taking a look at something that I know you're all thinking about and concerned about, and that is the coronavirus and the impact that it is having or may continue to have on the housing market. And I'll go ahead and, it's awfully speculative, but I will go ahead and give you kind of my opinion on what's going on with that. Now, with the coronavirus, there's an awful lot of speculation about, the impact that it is going to have on the economy. And, I wanted to take a deeper look at what it's doing to the housing market, specifically in our area. Now, there's not a lot of people in Arizona that have the coronavirus, but everyone is, of course, concerned about the trickle-down effect of, what could happen if, different people lose jobs. And, I think it's kind of a consumer confidence issue. A lot of people concerned about, what happens if Apple can't produce enough iPhones to sell and, all of those different trickle-down things. And as you have seen from the financial news, the stock market for the past 2 weeks has been getting absolutely hammered. But that actually is not a terrible thing for the housing market, and that is because interest rates have also been going down kind of with the stock market. As you may have heard, the Fed decided to cut the federal funds rate by 50 basis points or 0.5%, which it does not immediately impact mortgage rates. I get people all the time who think that, okay, well, I should now be able to get a 0.5% better rate. That's not exactly how it works, but it does tend to have a trickle-down effect. Mortgage-backed securities, bonds, things like that affect mortgage rates. When the Fed cuts rates, those tend to go down as well. So mortgage rates are at an all-time low, and what that's doing is it is improving affordability. People now feel like, hey, I used to only be able to afford a $300,000 house. Now for the same monthly payment, I can buy a $325,000 house. Don't quote me on those numbers. I'm not, doing the math. I'm just kind of giving you an idea of how the lower rates are improving affordability. So it's kind of a two-edged sword. We've got, confidence is down a little bit. People worried, concerned, maybe putting their home search on hold. But then other people are saying, man, these interest rates are killer. I need to lock this in because whatever the coronavirus is, I'm sure it's not going to be around for 30 years. And I want to be able to borrow this money at such an insanely low interest rate. Another thing to keep our eye on is that there is a lot of speculation that home builders get a lot of their supplies from China. And if they're no longer able to get those supplies, home building is going to slow down. They will not be able to. They already are backed up. Builders cannot build the homes as fast as they can sell them in most cases. If you go into a builder right now and you want to build a home from dirt, you're usually going to be waiting 7 to 8 months. And that's just for a normal tract home. I'm not talking some, custom mansion. Just a normal home, you're waiting 7 to 8 months right now. And if they get backed up from not being able to get supplies that they need from China, that could hurt new construction, which is going to put even more pressure on the resale market. So I don't have a crystal ball. I don't know how severe the coronavirus is going to become. But here's what if I were a betting man, here's what I would put out there. I believe that it is going to continue to force the lower end values to go up. So if you are, buying or own a home under, let's call it depends on what part of the valley you're in, right? If you're in the Southeast Valley, somewhere below, under 400,000 or so is still being squeezed. Very few homes are being built in that price range. Most first-time home buyers are looking in that price range. There's almost nothing available to buy in that price range. And I don't, with how low interest rates are, I think, not a lot of buyers in that price range are taking money out of the stock market to be able to buy those homes. And we're going to continue to see home values rise, and we're going to continue to see multiple offers, and, fueled by even lower interest rates. Higher end, I certainly do not predict, and I'd like to be really clear on this, that home values are going to suddenly start to fall in the higher end. But I wouldn't be surprised if we started to see the market up there slow down just a little bit as people wait this out. But I think eventually it'll cool down and things will get back to normal, and then it'll start chugging right along again. So there's my prediction. We'll keep you updated on how accurate I end up being.